I want to hit this real quick. Stock splits. This question came up. So just a couple, this is real brief. That some of us are invested in individual stocks. We hear that sometimes a company is doing a stock split. So in case you're curious or you own stock and that happens, I just want to give the 40,000 foot view on that one as well. Let's take a look at this. So, all a stock split is when a company is they're dividing their shares up, right? And they give you more shares. So if they're doing a 2-for-1, if I got one share, my one share becomes two. And I know in the beginning, years ago, when that used to happen, I'd be like, so wait a minute. If my one share is $200, that means I now have $400? No, not it don't work quite like that. Basically, that value would get split in half as well. So as you can see here, I said that the value in the fiat terms, US dollar terms, it does not increase. Just the number of shares increase. So let's look at this example right here. If I had 100 shares in company A and each share costs $10, that's $1,000 worth of company A stock. I got 10 shares. And that company declared a 2-for-1 split. Okay. On the day that it splits, my 100 shares will become 200 shares. Okay. But the value per share is reduced though on the day it splits by half. So my US dollar value is not going up. In other words, before the split, I had $1,000. My value in US dollars was 1,000. 100 units, 100 shares times $10 a share. Then the day of the split comes. On that day, my value is still $1,000, just that I now have 200 shares, but it starts off at $5 per share. Okay, so no harm, no foul, nothing gained, nothing lost. There is no change in the company's market capitalization. And that's how the value of stock prices is determined with market capitalization. We can talk about that more later too. So no harm, no foul. So you might ask, well, what's the big deal? Well, why do companies do this? So I wanted to try to answer that as well, because it does accrete value to the investor, right? I used some qualifiers here. I said on the day the split happens, you still have $1,000 initially. You do have $1,000. The split itself didn't accrete you any value with the action, but they do this for a reason. So why do a stock split? So one is to make the price more affordable, because there are a lot of stocks out there. I mean, they cost a lot. Like, I've invested in stocks, they're like $1,000 a share. And the average person or the average retail investors, and that's how we should consider ourselves. We just the average Joe Smo on the street. We're not big investment firms or insurance companies that buy billions of dollars of shares. The smaller investor, the retail investor, when a one share of stock gets really high, that discourages them from buying. They just feel like they can afford it. And the company wants you to buy their shares. So when more people buy the shares, that does make the stock price go up. So, and that's what I mean, that on the day the shares split, there really is no increase. But the whole reason for doing it is many more millions of people will look at it and say, okay, hey, I like this company. I believe it's going to kill it in the AI future. Let me get in now, but I can't pay $1,000, $1,500, $2,000 a share. Oh, they did a 10-for-1 stock split, and those happen. I have two companies that did 10-for-1s last year, and they were at $1,000. So right after the split, one share was just $100. I could add more shares because it's hard for me to come up with $1,000 a pop. Okay, so that's why they do it. And the more people that buy it, that will make the price of the equity go up. Another reason is that when the financial media and investors and people who are analyzing companies, when they see a company announce a split, they usually view that as something positive. Like, this company's on good times, they're doing well. Oh, they announced a split. And as a matter of fact, if a company announces a split, from the day they announce it to right up to the day they have it, and usually a little past the day, you will really see that stock price take off. Okay. People just view it as good news for the company. And so companies use that strategically. Okay. And that's another reason why they might announce it. I think I mentioned this. Yeah, smaller retail investors like us could get in. You know, we talk about buying shares of stock, and this is like what they call a spot market, meaning you just go, I'm just gonna buy this share of stock, and now I own it. That's like buying a spot market. You have I don't know how many of you are familiar with it. You have this whole big options market where people buy puts and calls into these are options contract. This is the 300 level stuff, people. We're not going to go into that. But to buy an option contract, one contract is 100 shares. So if if one share costs $1,000 and you are required to buy 1,000 shares or 100 shares or something, 1,000, that's a boatload of money. And so that's another reason. It lets markets like that, and that options market is billions of dollars. We just know the spot market and our little ETFs and Roths and putting investments in there. So they do it to attract that market. And then also companies like to have their stock in an index, like the S&P 500, that's an index. The NASDAQ 100, that's an index. If your company's stock is in an index, that tends to make the stock be supported more and be bought up more, because like S&P 500, that's maybe the biggest index on planet Earth. People all over the world are in that. And every month it has to be bought. In our 401k example, we talk about every time you get paid, oh, I got the S&P 500 index, the money automatically goes in there. So the people responsible for doing that, every 2 weeks, every month, there's hundreds of millions of people on planet Earth who that index has to be bought, which means the stocks in that index have to be bought up. So companies like to get an index because that's guaranteeing that they're forced to buy so much of your stock, and that just supports and pushes the price up. So they do it strategically. Yes, on day one, you got the same value. But generally, when you see a stock split, if you own a stock and it's going to go through a stock split like that, it's very favorable for the company you invested in over time.
Thanks for that explanation.
Thanks for the explanation, Brian.
Yes, sir.
Because there was a time, when before, you start knowing about splitting stocks, like you said, there's some stocks out of here that being, for financial situations that they're, just not they're not attainable for some people.
Mm-hmm.
Because I was doing my research. I mean, when Chipotle's first came out, because they had some of the highest stock out here before they split. And when they started out in 2006, their stocks were like $22 a share. And their stocks went up just before this split was over over $1,000 a share.
Mm-hmm.
So it's good. I've been doing a lot of things like Brian, doing my research on things like, AI, because that's the next big thing that's coming up. And, I've been looking into it, and I have bought some stock, Brian, just recently in October for like $4 a share.
Mm-hmm.
And the stock then went up to like over $24 a share now. And that's in a couple of months.
Yeah.
And the forecast for this company in 2025 is that it's going to grow even larger. So I just tell people today what I've learned from you, and thank you, Brian, over the few years we've been doing this, is that to do your research, before you start investing in individual stocks. Do your research on these companies, find out what the next big thing is. I'm looking at now is AI, and I'm looking at now is quantum computing.
Mm-hmm. Mm-hmm.
And investing in companies. And it's small now,
Yeah.
but if you're looking towards the long term, all these things are going to pay off is because you're going to find these shares of stock for a very low price where you can attain it and attain some shares of it,
Mhm.
And, I was looking at NVIDIA before they split. It was just hard for me, to even attain some of that stock until they did the split.
The display, yeah.
Yeah, and I've got me some, So there are things out here that you can attain if you're thinking about individual stocks, and you can get in on it in the beginning and get these shares of stock for a very cheap price. But I suggest before you do it, do your research.
One of the reasons why I like joining these calls is because, just like Ray said at the beginning, when we were coming up for the elderly statesmen that's on this call, we were not taught this information. We didn't have the resources or anything to find out how can we build generational wealth. So, in addition to that, what I want to say is when it comes to investing, what I've learned over the years is that when others are greedy, be fearful.
Mhm.
When others are fearful, be greedy.